Welcome to the NWR Virtual Resources Series. My name is Kerry Stevenson, and next up we have Alligator Energy. ASX code is AGE. Now, Alligator Energy is the uranium and energy metals project development and exploration group, and they have clear pathways ahead of them for approval and development of its multi-jurisdictional portfolio. Joining us today is their Managing Director and CEO, Greg Hall. But before I hand over to Greg, if you want to ask questions, pop it in the Zoom Q&A panel down below. Greg, great to see you again. I'm looking forward to this, the Alligator Energy story. Over to you.
Thank you very much, Kerry. Nice to see you also. Well, thank you very much to NWR and the investors who are online and their clients. I'd like to introduce Alligator Energy to you. I'll jump straight in. Just on the corporate side, we have information here about our objectives and our strategy. We have a key project called Samphire Uranium south of Whyalla in South Australia, a resource project discovered in about 2008, ISR potential. We want to take that right through some project evaluation, approvals and pre-development and potentially in production. So we've got a lot of work to do on that project. We've only acquired it last year. We have a lot of extensive exploration for uranium in the Alligator Rivers region, also in the Big Lake area of over the Cooper Basin in South Australia. So some extensive exploration we've been working on for some time. We have nickel cobalt projects in northern Italy, in the Piedmont region, and that's where there's been a lot of historical mining. And we now have some strategic partner interest with a first visit by a partner coming in this year. We're actively engaged in evaluating further uranium projects, and our preferred target areas are in Australia, the US, and certain countries in Africa. So we've been growing quite a bit. We have a strategic partnership with Traxys, the global trading group out of New York, and I'll enhance a bit of that opportunity that creates for us. So that's just a quick introduction to the company. Some corporate snapshot information. We've got a board and advisory team and management team with experience in uranium through Australia and internationally. We have a capital structure, as you can see there, with quite a few shares on issue as we started from quite a small base. But we're well capitalised now after some capital raisings that we've undertaken in the last few months on the back of both the increasing uranium price, but also with the acquisition of our project last year. The strategic partnership with Traxys creates a lot of opportunity for us. It came about through engagement in evaluation of projects in the US and my historical work in the uranium market business. So we engaged with Traxys and agreed an arrangement whereby they would be our marketing agent for future uranium offtake. So that's marketing agent to put in place contracts for Alligator. It's not an offtake agreement as such. That creates the opportunity with both our supply from future production plus trading supply from Traxys to augment the ability to go into long-term contracts at a larger level. As well as that, we are evaluating potential uranium resource acquisition opportunities where they might be able to assist us. They've got the ability to help in logistics and finance support on deliveries of uranium and storage of uranium. And they've agreed to come in with some development finance on a project. Once we've got the first full long-term contracts in place, which are profitable for the company, then we'd have some development dollar support from Traxys as well. So it's a very strong relationship. We're looking for other opportunities and ways we can take that forward with the Traxys group. Only a couple of comments on the market that I wanted to make and specify here. This chart here looks at the uncovered requirements of the demand cycle, that is nuclear power utilities. In particular, this one is of the US, and it shows that over a period of a very few years, such as 5 years in this case now, there's almost 50% of the nuclear utilities are uncovered with future demand. And that's because there hasn't been a lot of long-term contracting for some time. There's been so much spot supply available. Now that's changing, as we know, from both the purchases by various developers, but also by the Sprott Uranium Fund. So we're going to see this change, but it does show how uncovered that the US utilities are. And in the European Union, surprisingly also, they're uncovered from about 26 to 2028. similarly by about 50%. So it just shows the buying demand in the existing nuclear fleet that is there. You don't need expansion of nuclear power to really drive this market, but that is occurring as well. The second chart I have here, it's a little bit messy, a little bit complex, but I want you to look at this in terms of the overall shape. This shows the start of uranium production way back in the 50s, a big bell curve out in the first part of the period, which is this one here, which is the nuclear weapons growth. Then you had the massive growth in the 80s of uranium production. After Chernobyl, there was a shrinking, and then you saw a gradual expansion. And it really shows the differences in the production locations over decades as we've gone through, as companies have changed and countries have changed. In particular, a few key points. When the uranium price last picked up in 2004, 2005, production actually dropped back because people forget it takes a long time to start uranium mines. Even to resurrect existing uranium mines or expand existing mines takes some time. So we did have a fallback when people tried to start expansion. Then we had a rapid expansion up. And of course, it kept going, kept growing in terms of uranium supply, even after the tsunami in Japan changed the scope of nuclear. And then we saw in the last few years, last 3 to 4 years, a reduction in total supply, which has now brought the supply down well underneath the demand. So it's interesting just to learn a few things from this. One is it takes a while to start mines, even to resurrect old mines again. And two, we need to see a drop in production to really bring some demand supply balance back to the market, which is now what we've got. So let me talk about Samphire's projects. This is our locations. 2 projects in South Australia, the Northern Territory and Italy. We have a corporate office, small corporate office in Brisbane, and an expanding technical office in Adelaide. A summary of our projects. I won't go through the detail, but it's just a snapshot there of our resource project at Samphire in South Australia, with a total of about 47 million pound at a very low cutoff grade. And what we're focusing on is the higher 15 million pound resource at a higher grade in the Blackbush portion of this project initially. We're going to be doing a range of work on this project in the coming few years. Resource enhancement drilling, which is imminent, so it's about to start in November. Extension of that resource if we can. Some additional extraction and recovery test work, which is needed with the more modern resins that have come to the fore in the last 10 years. And we're a big believer in the fact that many things can impact your ability to get into production, but having an approved project in a political climate that supports it is paramount to be able to get into production. So we're initiating our early baseline studies first thing next year, even while we still prove up the economics of the project. In Alligator Rivers, we've got multiple targets for a region. I'll go through some of those, a very small resource, but it's a very high grade region with lots of smoke, lots of intersections of uranium, but you're really looking for that large Ranger mine scale deposit. And we are preparing for some gravity survey work there in preparation for drilling in 2022. Big Lake uranium over the Cooper Basin, a scenario where most large ISR fields are associated with hydrocarbon basins, but no one's had a decent look over the Cooper Basin in South Australia. So we've got geophysics we've done, which we're reviewing in detail now, with some drilling planned for 2022. And I'll chat briefly about our Piedmont project, but it just mentioned it in terms of the high-grade nature of the nickel cobalt historical area and the fact we have some strategic partners there. This is not necessarily core to our business, but we know there's value for our shareholders to come out of this. That's the overall resources summary. I won't dwell on that. And the Samphire project I'll talk about now. We have a large exploration tenement, and we acquired 2 other smaller tenements just to the south of this. You can see the Blackbush deposit. The Blackbush deposit in the red, which is the primary focus of us and of where we're looking at the moment. It's a resource area that was found in 2008, 2009, as I said, and we're starting to expand that. We acquired this in October. We acquired the additional leases early this year, and now we're getting on the ground doing some work with some drilling starting in November. We did do a desktop study on this project in December. We're using Inception Consulting engineers out of Adelaide who are very experienced in the ISR area. And while it's a pure inferred resource, we couldn't publish the results of the study. We are able to say that based on the initial flow sheet and the modern extraction techniques that we believe will apply that have been tested on other projects, that the initial OPEX and CAPEX and cost estimates should be similar to other similar ISR operations. So we believe we've confirmed that to the satisfaction whereby we wanted to raise money and go forward with the project. Our first geophysics using some modern ground magnetics has come forward some interesting results. The white outline is the channels, the buried paleo channels where we see and find the uranium. The structural map underneath this is where the magnetics have shown up a concentration of structures in certain areas, which happens to be where we also find the highest grade uranium. These pink circles on this chart here are all 3,000 plus ppm, or 0.3% or higher. So there is a very high central core of this Blackbush deposit, which is what we want to explore further in our drilling and enhance that from an inferred into an indicated resource. And that's where we think there'll be potential here for an initial project. So this is the outline of the work we're going to do. It shows the sort of the tenor of intersection of uranium that we found before, 15 meters at 0.3%. We have increased the amount of cord holes we're now going to do in this resource because a lot of the work done before was open holes with logging tools, PFN, gamma, etc. We need to really do good geochemical analysis of the core out of these sediments and to make sure that we get a good correlation with the historical data. So we'll be doing sonic core holes. The ore zones in this area are around 60 to 80 meters deep. And then we'll be doing a lot of open hole rotary mud holes with, again, a suite of logging tools, resistivity, gamma, PFN, which we can then relate through twinned holes to the sonic and expand the resource in that manner. So that's our key work into November and December. And we're now funded such that we can continue further exploration drilling with a rotary rig into the coming year. So a fair amount of work about to occur on Samphire. Alligator rivers. So Alligator started in this province back in 2010-11, and it's got the second largest land holding in the province there. It's done a huge amount of work on the ground, following a lot of the initial leads that came through from the Beatrice and Tin Can Creek tenements down in this area here. So a lot of work, a lot of CSIRO research work, trying to find underneath the sandstone, which makes up the escarpment in this country, trying to find traces of these larger known resources such as Ranger. Now, we found a small resource at Caramel, we've got some sniffs in other areas, and we've got some more targets we want to follow up. But in particular, to the north now of this package, we've got what's called Narberlek North, because it lies to the north of the old Narberlek uranium mine. This is a very interesting package. It's got less sandstone overlying it, so it's more effective and more efficient exploration. But more than that, it's got this U40 prospect discovered many years ago by Cameco and UEL, just 200 meters off the boundary of our tenements, which hasn't been followed up into these tenements. So we've got our first IP survey, ground gravity, and then drilling plan for this during next year. So that's an important project to follow up, but more than that, these sort of contact zones with the basement rocks through this area are the ones we want to do a lot of work on. Big Lake in the Cooper Basin, a very large tenement straddling the areas of known uranium occurrences. There's a few small occurrences which were found adjacent to the oil and gas wells. Of course, the oil and gas is 3,000 meters deep. The uranium sediments we're looking for is 150 meters deep, so quite separate. But as many will know, it's the hydrocarbon leakage, the gaseous leakage, which is the reductant, which can form the uranium in these channels. So first of all, we've got to see, do the channels exist? So we've flown an airborne EM survey along these lines, and we're starting now to interpret the channels that we see there. And then is there uranium in the channels? And that's when we're going to have to do some drilling. So our first drilling programs will be to help define the channels, and maybe we'll find some trace uranium, but we might need 2 or 3 drilling programs to really determine whether there's anything here. But a very interesting greenfields project for us. And remember, this is only some 300 or 400 kilometers north of the Honeymoon, Beverly sort of region to the south. So similar sediments. That's our uranium story. The Piedmont nickel cobalt historical mining area, some excellent grades. We've done all the work across the ground to reproof this. There's not one drill hole into these series of areas. It's all been historical mining into adits, into hillsides. It's in the foothills of the Alps. And so we now have drilling permits, and we have 2 counterparties who've signed CAs to come and have a good look at this project. The first one visiting, in fact, right now in the coming weeks. So we think there is some good value in this. The European Union is certainly focusing now on homegrown minerals in the EV and battery minerals area. So there's a lot of support, and within the Italian government in particular, for new projects like this. So that's Alligator Energy. Thank you very much for your time.
Well done, Greg. You stuck to time. I'm very impressed. Now, Greg, a couple of questions for you from me. And ladies and gentlemen, if you want to ask a question direct to Mr. Hall, pop it in the Q&A panel down below, and I promise I'll get the questions to him. My question to you, Greg, is Alligator Energy, I really like it in Northern Territory, South Australia, that nice corridor, and you'll be doing there's clearly a lot of news flow. And then we push off to Italy. Now, you mentioned earlier in the presentation that you can see value upside, but I'm just wondering, was that already in the portfolio, or was that presented to you? Sort of as an investor, I'm thinking, okay, I can, and I love the uranium space, but then we pop over to Italy. So how important is that to you, and how much money are you going to be spending on it? Drilling, what's going on with that one?
Well, look, the uranium space is where Alligator started from the end of the last uranium boom, if you like, raised the funds, and was very focused on Alligator rivers only, and was still a very important area to us. But around the time that uranium really started to hit rock bottom price, 2015, 16, exploration in Arnhem Land is expensive. Usually access is difficult. It's seasonal, so you've got to do it. So it really became an issue for us post 2017 to keep raising funds for that sort of expensive exploration. So we branched out and looked at other opportunities. And in that energy mineral space of nickel cobalt, we had a few come to us. We liked this one in Piedmont because it was such a unique setting. Historical mines hadn't been touched. The first modern geophysics flown in 2015, and no drill holes. So it was just a unique opportunity, which we took at the time of uranium doldrums. Now, as we've done the initial work and we've prepared it with some information memorandums for investors to come and look at, we've spent minimal dollars at the moment, probably only around 400,000. We plan to spend around 500,000 on the geophysics program, and we think that will attract more interest into the project. And we're looking for a strategic partner to help in co-fund a drilling program going forward. So we've set it up with a total separate subsidiary, so it could be either amalgamated with other opportunities in Europe, so a separate Italian subsidiary, so that it can be combined, it could be amalgamated, or it could be a standalone project as people work with us and we start to expand it. Okay. Thanks,
Greg. Question here: can you quickly just summarize what drilling is happening this year? Now, I've heard that you're doing lots in 2022. This question is, what drilling is happening this year, and have you had any delays?
Yeah, we have had delays. Our delays have been a few-fold. One has been COVID. Getting a drilling company has taken a while. The drilling company with the sonic core rigs are based in the state, not in South Australia. So we're getting a company from Victoria. Their last drilling program extended a little. They're coming over with their people. They can get in because essential worker status and let them in, but they won't be on the ground until the first week of November. So we were hoping that would have been, in fact, late September was our original target. So it has been delayed. We'll do initially up to 14 sonic core holes, and that's about a 3 to 4 week time, because by the time we ramp up our work, we've got to be very careful with that sampling. You're pulling out a core which is 1 metre long and 100 millimetre diameter. So you've got to wrap it instantly, especially those cores you're sending off to go to ANSTO for testing. Ought to be snap frozen, if you like, or wrapped, vacuum packed, cooled and frozen. And then the other core, we've got to try to retain the integrity of it, so we photograph it. And then, so there's a lot of work to do in handling that core properly. So that's the most important work, because that geochemical analysis and that core work will really allow us to relate the historical data to this new geochemical analysis. And that's important for the next resource update. So those 14 holes will be done initially, and then we're on to 20 rotary mud holes within the same area of the Blackbush resource. And those should be undertaken this year as well, so November and December. And then a further 20 holes would be probably early next year.
You mentioned recently in an announcement that utility buyers had approached you, Mr. Hall. Are they looking to lock in future production? And what project was it they were attracted to, or was it the overall?
Well, no, it was to Samphire. I mean, because of our links with Traxys, Traxys have already introduced Alligator in the US to certainly some of the nuclear utilities and the arrangement we have with them as our marketing agent. As the spot market buying started to really punch up the price, and the utilities started to make direct contact again with potential producers, they go to the existing producers, but generally they've quite often always got contracts with them. They'll go to new potential producers like the ones who already have projects, already are on care and maintenance, ready to start. They'll be a primary contact. But the fact that they even gave us a call, and we're at least 3.5 to 4 years away from production. Even in a state like South Australia, which has got a very big experience base of approving uranium mines, regulating uranium mines. It's got an experienced public who knows about the uranium transport system, etc. Even here, it's still a 3.5-year approval process for uranium project. So what surprised us is that even though we're at that early stage, we're being asked, when would you be ready for production, and when could we start to talk about long-term contracts? Because talking about a long-term contract today and a relationship might mean you establish a contract in a year, and that contract delivery won't start for another 2 years. So the long-term contracting business in uranium and nuclear utilities is quite opaque, and it's quite individual. But nonetheless, you need to start talking early. It's a little early for us, and we said that, but probably from late next year onwards, it won't be so early.
I've got a load more questions, but I'll ask those when I see you. I've got a couple here. Could you please elaborate on possible early offtakes for uranium, what they may look like? Would there be a prepaid element? How would Alligator adjust a contract for the rise and fall in prices?
Yeah, well, there's a variety of ways of doing contract pricing in long-term contracts. And from my experience in the past, a lot of US utilities, if they're in an electricity regulated environment, they like to do a price related to the spot price. So either 98% of spot price or close to spot. And that's because when they go to get electricity price increases, they can't be too far away from the known market price of uranium. But some of them will do longer term contracts based on a base escalated price. Let's say you start at $55 and you escalate it by CPI every year, or you start at $55 and you have half your contract escalating and the other half is spot related. So there's a whole variety of ways you can do contracts. It depends a lot on the utility buyer, what they prefer, and what their other contract mixes are. So if they've already got a bunch of spot price contracts, they might be interested in some fixed price contracts. Now, for a supplier, you've got to be careful with fixed price contracts because you can lose some upside. However, it depends on how much of your total production you contract. The accepted rule of thumb at the moment is roughly, because we've got a very active spot market, somewhere between 40 and 60% of your offtake, you would probably do long-term contracts because you've got to cover your cost base and you don't want to have downside risk. So that's roughly how much you might cover on some form of long-term contract, and the rest you'd probably go for a shorter-term basis. You can have resets. You can have a contract price, and then after 2 years, you could reset it to halfway between where the spot is. If it's gone up, you reset it halfway. You've gone down, you reset it halfway. So there's all sorts of mechanisms you can do. Relying totally on the spot market is dangerous from a risk perspective, but if you lock everything and don't have any upside, that's also a downside.
Gotta hedge your bets, ladies and gentlemen. Last question, Greg, it's about capital raises from one of your shareholders. With 2 capital raises in 2 months, delayed drill times, it seems now more than ever that positive drill results are very important for you and for public sentiment and shareholder conviction. Do you have a time frame when we could see announcements regarding the drill results for Samphire?
All right, so we start drilling in the first week of November. It's probably, to get full analysis on these cores, is about currently 6 weeks. And that's because ALS, Bureau Veritas, all of the analytical companies, and you would
Smashed.
know this from your business, they are smashed with massive amount of work out of Western Australia,
Absolutely.
with gold and nickel, and out of the eastern states as well. So unfortunately, because there's been such a ramp up in exploration in all commodities, not just uranium, there are those delays. So I wouldn't expect to get formal geochemical results out until mid-December at the earliest, but possibly the new year. So that's just being honest with what these things and the time these things take. Now, we did take the opportunity, and your questioner is right, to raise twice this year. And the second time we raised funds, it was at 2.5 times the price of the first raise. The opportunity was there because we could take our project so much further. We could ramp up work on baseline environmental and approvals process early next year, even while we're doing the scoping study. And the key reason for that is that will be the delay and the critical path to any production, not technical work, but the approvals process. And so being able to do that plus a full field leach trial and IX plant along with that, which is the pilot plant of in-situ uranium, that's what was critical. So we're now really funded well to do that. Traditionally, you still will need more money before you get into a production scenario, but by that time, you're well advanced in terms of your feasibility and pre-feasibility and things.
Well funded for the moment, ladies and gentlemen, $21 million in cash, and clearly doing lots of drilling, lots of news flow to come. ASX code is AGE. Greg Hall, CEO and Managing Director, thank you so much for joining us at the NWR Virtual Resources Series. See you soon.
Thank you very much, Kevin.